Hello everybody, welcome. It is indeed just about 1900 hours on Monday 30th of March. We still have one day left of March, so we'll be trading that tomorrow together as a group. Prepped a session for you all tonight. I'm just reading the comments. Hi Adam, Peter, hello, and Janelle, welcome. Thanks for being here. Appreciate that. So yeah, welcome everybody. I do have something prepared. We'll dive straight in. Hi Rosette, good to see you on also, and thanks everybody for showing up. Briefly tonight, the bad part, or rather sadly two bad parts. First, as always, in line with my full disclosure to you all always, I appear to have some kind of flu. Tempted to say it's a bit of a stress/man flu really. I was, in fairness, under a lot of stress last week. Various situations, nothing I can't handle. And it didn't stop us making pips last week now, did it? It is what it is. Secondly, and this is the bad bit, some people sadly should not be trading. Not because it's too hard, but because they will not follow rules. Some won't so much as listen to the bloody rules. They want excitement, constant action and quick wins. I don't want those. I'll take them if that's all that's on offer, but trading punishes those things. It punishes if you can't sit on your hands, and it punishes if you try to revenge trade. Do that and you'll just fund someone else's account. Trading involves risk. Life involves risk. It is, after all, a sexually transmitted thing. Now, on a much lighter note, a few interesting topics to cover this evening. We're going to be looking at FOBering, the verb associated to our Yodapedia term for hovering one's finger over the button used to close a trade. FOB, F-O-B, finger on button. We're also going to cover overtrading. Bit guilty of that myself on our last Thursday morning DAX session. A very profitable session, and in fairness, we took a lot of pips from that. Simply, there were a lot of signals close together and big enough swings to take pips. Those two subjects go quite well hand in hand too. We're also going to look at pivots trading ahead of looking at it live in charts tomorrow morning with the DAX. I'll begin by reading this message from a trader who thankfully asked for the overtrading to be covered. I think it will fit everybody. Hi James, would you be able to cover overtrading on some of your clinic sessions? This is my struggle. Once I mark the levels and open a trade, if it pulls back to entry, I close. Sometimes it continues in a desirable direction, so when to go back in and not overtrade? By the time I see the trade is valid, it's already late to go in, and SL, stop loss, becomes bigger if I want to participate. When I review my trades, the candles are printed and do not show the pullbacks within that minute. They have made me to close the trade. My analysis was never a problem, execution very much so. Now, there are no doubt many traders who suffer this issue, and when I point out the reasons we're best FOBering, it might well cover the overtrading part as well. In a nutshell though, overtrading is best avoided by taking only one trade per signal. Divergence, rejection of a line and the signal. Enter the trade and switch to FOBering mode. We have few reasons to enter a trade, but if we are to maintain a high win rate and ensure proper cowardice in the face of losing pips, then we need to trade safe always. I use price action, looking at the type of bar that is currently on an as at now basis to decide how hard my finger rests on the button. I also use pip count, or if you prefer and know the term, quant bars. This being the quantity of pips in the current bar measured against the pips in prior closed bars. I also look at the higher value EMAs on the current and the next up time frames. I look at previous levels of support and resistance and include all the lines known to be respected. So Camarilla, 40s, 60s, BRNs, big round numbers. Long or short trades are treated in the same way. As price approaches something it struggled with before or might struggle with, accompany that line with a measure of divergence against my trend and I generate a tolerance, a level whereby I'm not holding a trade if price returns to it. Some examples might help here. So let's look together now at some live action, if there is any, and observe. No trading please, this is educational only, and as always, since it will go public on YouTube, we are going to be looking only at the DT2, DWL3, dynamic hedge strategy, whichever of those you came to me through. It's the same thing, it's just got different names since it was associated to various companies that I worked with and adopted it through me or through our Realtor Traders group. So here we are, we're looking at the Dow and we are looking at it attempting to go into a sell signal with the bands closing. Range then, if you enter on the break below that bar, you're FOBering now. FOBering. If the PSAR flips, that's what you're waiting for to stop you from FOBering so much. Now, if it comes back above dark blue, you could consider closing. If it drops out below light blue and light blue starts to expand, you can hold. Otherwise, you're still in. This level was your entry. This level is now your tolerance. It's hopping, so we expect it to go through here. Your first target would be R2 and then the BRN. That's what it would be out. You're out the trade. You're out the trade because it's a low test bar and it went back above blue. People will say, but it's still going. It isn't. The 2 minutes gone as well. But tomorrow is promised to nobody. We break out below that bar. It's a new signal. It's not a new signal. It's not a reason to be going back in. That's what it's not. What would you have got then? You'd have gotten just those few pips there in this example. That's the honest to God truth. There it is. From there to there, you'd have gotten 5 pips. And now it carries on. But that's a low test bar. That there is a low test bar. So I'm not going to apologise for saying I'd have pulled the plug for the 5 pips. In honesty, I might have gone back in as we closed and dropped down. See the little gap? I might have gone back in myself there, back below the light blue line. But it's another 5 pips because we've gone below a light blue line and we've come back up above a light blue line. So there you go. You've got a potential entry and a potential 5 to 10 pips. That's it. That's all there is. And is when I often freeze. Look at that. And Andrew has written, hang on, let me try and get rid of this. And the crosshair is what I'm trying to get rid of. See, man flu. And right there when you said out is when I often freeze thinking it might go. I know I have to stop thinking. Yeah, stop thinking. There's time for regret. But as life teaches us, rather regret something that you did than something that you didn't. Are you with me? So yeah, you took 5 pips. You're looking, remember, Andrew, remember everybody, we're looking for 10 pips an hour. Just 10 pips an hour. You just got 5 there. You might have gone in here. Let's say you went in a long on a closed bar above the double white lines with the hopper. You've gone in there. Goes up from 45, 360 for round numbers, up above pink and back down below pink. Okay, there's 5 pips in that. So 5, 10. And it's faffing around. No, it's not gone anywhere. It's not gone to the first or what would have been the second target. And it's got an inside bar, a low test and a high test. So it's a combination of range or reversal. A MACD scalper hopper is potential over here. Look, if this starts to turn up, we'll have the MACD scalper hopper, won't we? So I won't apologize for saying that's what I would have done. That's what I would have done. I'd have closed with the 5 pips. And because of that, there is a gentleman offering me a let's say, a substantial sum of money to trade for him, because he'd rather have 5 pips and 5 pips and 5 pips than minus 20 or, you know, nothing. That's it. Janelle says, I feel like people don't realize that 5 pip trades add up. Oh, they do, don't they? Here we are. What have we got? We got 29 people in the session with me. How many of you 29? I tell you what, we'll do this in binary. Write 1 in your chat facility if you've been in a live session with me, and 0 if you haven't. There you go. There's 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, a 1, 0. Kelly hasn't been in a live session with me. I don't know why, but Kelly, you're welcome to attend them, I think. Let me know how I best get you into the sessions, or you've checked it to a 1. Okay, so in my live sessions, have you witnessed me taking 5 pip trades and saying, I'm out, it's only 5 pips? 1 for yes, 0 for no. There you go. A load of 1s and 1 yes sir. There you go. So my point, 2 5 pippers in an hour is 10 pips. And you know, I said I'd be in from the break of that low, in, out 5 pips. And it's back to where you got out. You've missed nothing. If we go long here, we'll do this one on a live basis. If we go long, breaks above that line, 35 seconds close to. So let's say we've just entered there at 45, 349. It was 349. Okay, FOBering. We need to break that dark blue line. 349. 349 is where we got in. 349. 349. 349. Need to break through that dark blue line. Still 349. Still thinking out. You see that? 349. Click out. We were FOBering and it went to 51 and we said out. That's 2 pips. So now we've had 5 and 2. Why did we close? Because they're still flat. This hasn't decided it's going anywhere yet. And he didn't hop yet. That's not a hopper. If we break out below that low, we could consider a new entry sell. We're on 7 pips, a 5 and a 2. Got to break that low or we're not going short. He is in the right place over here. We are in sell mode over here. We don't break below that low, we can't go short. We're sat FOBering on either a buy or a sell button for now. Nothing. There's a fib. Green, red. We could draw a fib. If he closes red, we can draw the fib and look for the level he breaks. He's got to close red before it's a fib. We're waiting. Nothing we can do. We can't go short. We can't go long. Nothing we can do. Nothing. Still nothing. Not thinking. Just there's nothing I can do. Nothing. Still nothing. He's close to closing an inside bar. Break out above him. We've got a possibility to go long. Not yet. Now. So we've gone in at 350. It's holding above white. And it's getting closer to hopping. 350. Didn't like the big bar. 350 minus 5. We're out. That's it. So we take a loss there. You close if it comes back to you. I was trying to read the question at the same time. You close if it comes back to the entry level, ideally a little bit above. I was slow calling the out there. Ideally I wouldn't have taken the loss because he's still an inside bar. We were looking for a break of that high to breach that high, and then that would have made sense. The fib we were trying to draw stopped being a fib, but I was slow calling the out on that one. Happy to admit it. I did tell you at the beginning of the session that there's a touch of man flu on the go here. We now need a hopper or we're overtrading. No hopper, no nothing. Remember I said the MACD scalper pattern? The angle. So a hopper and a break above that high, ideally a flip of that PSR would really tempt me because we know what that level is, don't we? And he's still a young bar, but it is a higher high, so we are seeing the MACD scalper pattern and we're close to hopping. I'm still not suggesting that there's anything to do on this one because we're on 7 and I'm going to say that one was at least a minus 5, so we're on 2 there. 360, show me a 360 and a flip of the PSAR, and we'll be targeting first, well, it's done it, 360, and we're targeting 45.4. We're above pink. Pink is okay, it's your tolerance. 360 was your in, 360 is your in, 45.4 is your out. 45.4 is your out. Your tolerance is still pink. Tolerance is still pink. 15 pips on the table. Going below his close is a worry. That risks 10 out. 10 was the out. 10 out. Going below his close was the 10 and out. So you got in at 60, you got 10 pips there. A 5, a 2, a -2, and a +10. That's 15 pips, lads. How long were we looking at it from? Let's just put the crosshairs on and say that was your first entry, 1908. That was your last exit. 8 minutes. 8 minutes, 15 pips. Fair to say 2 pips a minute. Now, again, we are 31 people online. Does everything I've just talked you through here make sense in comparison to our live trading sessions? Or, you know, am I too pumped up on flu tablets to be making sense? Janelle, love it. Scott says, yes, it makes sense. This is your superpower. Says, I'm not sure who that is, but it's not a superpower. Zach, okay, thank you, Zach. In fairness, lads, I'm nobody. And you know I'm nobody. I'm a regular nobody. I grew up in Liverpool with nothing. I'm nobody. So if nobody like me can do this, anybody can do this. That's the reality. And the re-entry would have been, he stayed above the white line. The 360 would have been a back in. 360 and back in. Finger on the button. Can't come back below pink. 360 is in. 360 is in. 360 is in. In. Still in. We've only hit out. As we come back below pink, you're out. You see? So now we're on 16 pips in 8 minutes. 2 pips a minute. It's great to be nobody, and I tell you why nobody, because nobody wants your autograph, nobody wants to bother you, everybody just leaves you alone and let you do your own thing. And in our own thing, in 8 or 9 minutes, we've got 16 pips on the table. 16 pips. That's it. I remember having an online conversation once with a gentleman who then said, please come and work for us, or with us. And I sold him a strategy from a company in London that will remain nameless. But the conversation was an online one. It was his webinar, not mine. And I happened to comment that I'd just taken, or I'd locked in 60 pips on the DAX. And he said, 60 pips on the DAX, James, that's great. What time frame are you trading? And I said, 1 minute time frame. I can only type, you see, like you know, you guys are typing to me. I was typing in the response box. Oh, keep talking, I said. Keep talking. I've just got 60 pips on the DAX. It seems to like the sound of your voice. And he said, 60 pips, well done. What time frame are you trading? I said, a 1 minute. And he said, 1 minute, you nutter. And I said, nutter with 60 pips in the last 15 minutes. What you got? And that's the reality of what's possible on a 1 minute. 60 pips in 15 minutes. And let's just justify that, will we? Because if we go back here, there's the Dow giving a sell signal. Hopper, combo, sell, signal. 60 pips in 15 minutes. There's 1 minute. Let's go down to 15 minutes. 15 minutes. 15 minutes, 11, 12, 13, 14, 15 minutes, and it's 100 pips in 15 minutes. 100 pips in 15 minutes. With thanks very much to the deliverer. You know, obviously it went further, but hopefully you can see my ideals on FOBering. I'm watching the lines, the dark blue, the light blue, the pink, the yellow, the green, the double white, the stuff that's happening here, the stuff that's happening there, the stuff that's happening in relation to these lines, inside bars, high test, low test. All of those things are things that I pay attention to, and they're things that matter. you know, we'd have had, what was it, a pip or so from that one. There's a rejection of 60. So you see here where we pivoted off 60 and didn't go below it. That represented an entry right there. I know I was busy waffling and rabbiting, so apologies for that. But there is a 63. You're in at 63, targeting your 45.4. You'd still be in this one, because we've closed high. I don't recollect the pullbacks on it. I was looking at other stuff. The bands are starting to expand over here, but you're in at 63. Your tolerance at this point would be 10 pips to 73, or if you like, the open of that bar. That's your tolerance. Otherwise, you're looking for, and let's just for round numbers say 65, you're looking for a 35 pipper. 35 pipper. That's it. That is how FOBering works. And yes, it means you will place a lot of trades. Who was on with me last Thursday morning? Is there anyone who was on the DAX session on Thursday morning last week? Anyone? There you go. Judy was on the DAX session. Were you? Oh no, the DAX. Our morning, Judy, not yours. There you go. Kuda was. Now, Kuda, did we take a lot of trades? Well, did I take a lot of trades? A 1 will do, or a 0. Okay, Judy. We did. You even stopped mentioning you were overtrading. That's right. And Bob says, oh yes, there you go. Now, along with the overtrading, did we take a lot of pips? There's your first target just delivered. Yes, says Kuda. Thanks for that, Kuda. There you go. That's my case and point. Now, with this bar, it's a high test bar on a big round number. If it goes red, that's you're out. There, you're out. Now, you got in at 65, you're out at 95. There's 30 pips. Coupled with the 10 and the 5, and the 2 was a +2, -2. There was a 1. We're up like 40 pips now. Many, says Bob. Thanks, Bob. There you go. 40 pips since that was the first one, 1908. 40 pips to there, 14 minutes. 40 pips using FOBering, using direction. What is it? Not direction. There's that flu thing again. Divergence, rejection of a line, signal, and FOBering. And yes, it's overtrading because we're on 1, 2, 3, 4, 5, 6, 7. There's 7 trades in there, I think. 7 trades. But on that Tuesday morning, let me just open an Excel spreadsheet for a moment. And I'll go File, Open, Live Webinar Trades. And I just want to see what we took on Thursday morning on the DAX. As a group, I'd started a bit early, so I got a few more. Sorry, spreadsheet's taking a minute to open. There it is, Thursday morning. Yeah, 901, 903, 904, 908, 910. 1, 2, 3, 4, 5 trades in 10 minutes. 9:13. And by 9:13, so in 13 minutes, we'd taken 1, 2, 3, 4, 5, 6 trades and 115 pips. 115. We ended the morning with 155 because the 952 buy on the DAX yielded 40 pips for us. But that was 155 pips in the session. 1, 2, 3, 4, 5, 6, 7 trades in the hour. 7 trades in the hour on the DAX. Is it overtrading? Yes. Do we care? Well, not if they're wins. Remember, and some of you, Bob, you will remember this because you probably were on that session, but there was a company I worked with in the past who shall remain nameless, and you know them, Bob, but they used to do daily charts and look at daily signals. And I remember them saying in a webinar once that, the stop loss was 200 and something pips and the target was 100 and I wrote a question and I said, did you just say the target was 2.5 times the stop loss? I mean, the stop loss was 2.5 times the target. And he said, yes, I did. I said, that doesn't work mathematically. That doesn't work. You can't do that. And he said, oh, well, you can if you write more than you're wrong. You'd bloody want to be, wouldn't you? And he didn't read that one out either. But that's it. You can't have a stop loss that's bigger than your target. When you start trading like that, it's a slippery slope towards giving away your pips in maybe the death of 1,000 cuts. I don't know what the name is, but it ain't good, that's for sure. Some of you who've known me for a long time will remember the place I'm speaking of. The 360s invalidated by the pink line at this point, and the fact that that's red. There you go. Bob's written, yes, I do. Thank you. Thanks, Bob. And Judy says, I was doing that too much before. You go above pink, you've got another chance. You're up 40 pips now, remember. 40 pips is what you've got on the table. And if he goes below zero there, and we crack below the not only the white line, but that low and that where that PSR is, you've got a chance at the short. There you go. Click, you sold. You're in the sell, in the sell, in the sell, in the sell. I'm focusing in the out. Scratch. That's a scratch trade. It's a zero and all. No doubts, ifs, buts, arguments, nothing. You've scratched it, but you're up 40 pips. You don't care. Well, you shouldn't care. If you do care, then you're emotionally involved. And you shouldn't be emotionally involved in trading. It's just a job. You're just here to do a job. You're here to take their pips. They're there to take yours. And but it's gone now. Look, it's gone 10 pips since I closed out for nothing. Yeah, you didn't lose anything. That's that. You didn't lose. You took a scratch. You're up 40 pips. Tried, tested, proven. Leave it alone now. Why? Well, because there's a bit of divergence and we found this wedge. See the wedge? There's a wedge. Look at the wedge. You can see the wedge. It's narrowing. There'll be another opportunity, another bus. Don't run after the bus. If you do, you're, like me, going to try for your first heart attack. I haven't had one yet, but if I was to run after a bus, I dare say I would. And again, there'll be the people, oh, look at that. If I'd have just held it below it's swingy bars. These are big enough bars. Look at the size of this bar. We'll highlight him. We'll ask him what his low and his high is. His low is 321. His high is 345. What is that in terms of pip count? It's a 24 pip bar. What is that in relation to this one? It's twice the size. It's twice the sodding size of the bar. So it's a BFO. BFO, big off, and don't play with it. That's what it is, you know. Another past flaw, my overtrading was chasing buses. There you go. We don't have to chase them because we don't do FOMO, because fear of missing out doesn't apply to us. Why? Because we can read divergence, higher lows, lower lows. This isn't going to carry on. It's probably not going to go to the big round number. It might tip R2. And if it does, well, then it might go to the big round number. But the bands are closing in, so on the 2 minute. So they need to change if that's going to happen. And we're already out, and we can't go back into that one now because we've seen a BFO, and that's it. We have to sit it out and leave it out, knowing that we've got 40 pips for this hour with our 5, 2, 10, 30, something like that. I forget the exact counts now, but what we need to be able to go back in now, we'll wake up if it gets above 340, and if we see some green over here. Remember, we like Heiken-Ashi over there on the 2 minute, and I haven't got Heiken-Ashi on there at the minute. So let's see what they look like. They're all solid red. We've no wiki bars yet, so we need a wiki Heiken-Ashi, as in wiki top, wiki bottom, and then followed by a green bar, low test already. Okay, we're happy to wait. Show us what's coming next. And then we could wake up at 340 and re-enter as we get more up towards white. We need to see higher lows, although it is starting to, what's the word, go red now. That means my potential for a MACD scalper pattern's waning. Still seeing divergence though, although now he's a lower low, higher low. So convergence as at now. Still a wedge pattern. And I'm still glad I pulled the plug at a zero there, because I'd rather follow the rules and miss out than break the rules and not have an excuse for not having pips, you know. That would be just, oh yeah, I broke the rules because it ended up in a profit though. That's not the point. We follow the rules always, and we don't worry whether there's profit or loss then. We follow the rules because the rules will give us consistency. If we want to get consistency, we must give consistency. That's the reality. Now, does anyone have any questions about FOBering? Fire away. This is your chance. Here's my challenge. I don't use FOB enough. I set an SL of 10 to 15 pips, then quickly move my SL up to break even or +1 as soon as it hits break even. I frequently get stopped out and miss the run. I think I need to let the trade breathe more and not focus on setting me break even. You do, Scott. That's my point about FOBering. You know, if you place a stop, you've placed an order. The broker platform is designed to fulfill orders that it can reach. If you place it close enough, it will fulfill the order. If it fulfills your order, it's done its job. If your order's too tight, you've given it a sensible area to fulfill, you know? So use FOBering more than you use your stop. Thank you, Scott. He says, yes, sir, very clever. That's just for the recording. Now, we're 30 minutes into this one. I don't want the YouTube video to be hugely long, so I'm going to end the recording here. But if you've got any questions that you want to ask after that, I'll answer them. And Zach says, if you enter following rules, but it immediately shifts the other way, do you just close it? You do, yeah, and you take the minus. Remember I was slow calling an exit over here or something? You just take the minus. Take it on the chin. I did say that one. I think it was a -2 or a -5. So you're up 5, up something, and then down 5, and then up 10, and then up 30. If you keep your losses small, you can let your winners, because that was the best one, that one, or this one. That one was the best runner at 30 pips. It did hit the target we were looking for. It's lining up to do similar now. Remember I said we'd wake up if it gets above 340. The higher lows, the green, the wicky, we've got a wick on the top and a wick on the bottom. You see? We got 20 seconds to the new bar. If the new bar over here goes green, we'll know we're going to be looking for a long above 340 there. That's it. Just follow the rules. Cut the losers quickly, you know. How do you differentiate between a little wiggle in the entry bar versus actually going against you? Or do you close and reopen? This is for a situation like Zach mentioned. I'd suggest close and reopen, Rusty. But don't leave it too late before you reopen. Watch the price action on both time frames. Watch for the breaks above and below things, you know, if you're in buys and sells. Look for high test bars. We'd need to break that to be sure that it's, you know, because if that is only a high test, well, then we're breaking back out low and we're going short. Break above red and red will change to green, you know. And if you happen to miss out, all good, wait for the next bus. Exactly that, Zach. Yes, if you miss out, like remember we got out here on nothing and we missed all that. Okay, so we wait. That's the deal. And the deal then is that you are going to make sensible pips. And it might be 2s, 3s, 5s, 10s. There was a few 10s and 20s on that Thursday morning DAX jobby there, you know. Now, for those who were listening, we had to break the high of that bar to go long. 340, we all know, is a thing. So we go up above 340 and we finger on the button and we come back below red and we're out. And so, or 2 red and we're out. So right there then, there is the potential for another. I've got to line up with his high there, and the red bar. Okay, 1 or 2 pips. It ran 5, came back below 40. I wasn't quick enough to talk that through you all. But you all know about my 40 and 60 level. And it isn't just 340, it's 440, 540, 640, any 40. It's a thing. It's a Fibonacci thing. If he goes red, we can draw a fib and then we can monitor the fib and know if it's going to break or not. While he's hovering around red, we can put the fib on and see if he closes red. There, he's red. So that fib is valid while he's red. If he goes green, the fib stops being valid. And then we've got extra lines to pivot from or switch over to, you know. All of those little tips and tricks, they help us to identify what it is we should be or could be doing. The new fib is at the top of that red now because there's 4 greens and a red. We need at least 3 greens to be able to draw the fib. We got an inside bar, it's low test, wiki green. You see, all of the things we've just been discussing are happening right here now. Remember, the full signal is only up here when we get above that white line. That's where the full signal is. And if we get above that white line, when he goes, this green line goes up through that 0, then we've got a full-on hopper combo, and we would again be looking for the 45.4 as a target. If it doesn't, then it'll crash out through red, and there'll be a sell below red, targeting R2 and then the big round number, and then we can evil twin the fib to see where it's going to go from there. Evil twin, we go from and to. Should we just turn it on its head like that? There you go, evil twin. Now, just as I did the evil twin, it breaks out and it cracks on north. So the fib held. You know you're still looking for a break above that line and a break above that line. And there you go. That keeps your mind active, and it keeps you active rather than thinking trading's boring. You're watching the life cycle of every single bar, and already we're 35 minutes recording. So it doesn't feel like 35 minutes, does it? It doesn't feel it to me anyway. But I've been doing all the talking. If you were carrying out this analysis, you'd be having that conversation with yourself in your own mind because, well, that's the right way to do it. You know, bands are closing in. That's good because that means they have to close in to follow price into a range where it can break out of the range, heading back up towards the 45.4. Or it dies on this fib and comes back down below. But it looks solid enough to me. That's what I'd be looking to do based on this stuff. Your next tolerances then, once we get above pink, would be the target line. You got to get up above 360 and stay there. You got to get up above this white line and head towards this pink line. And breaking up above the pink line here offers you the 45.4, the 420, this purple line, the 987, and in fact R3. That's all the standard stuff that we've been looking at for how long? How long? Ladies and gentlemen, have you been working with me? And tell me, please, is this not exactly what we were just looking at? 15 pips on the table, finger on the button. There's your tolerance at 360. I'm going to say 10 pips at 361 just because I'm a big round number freak. Break below 361 and I'm pulling the plug. Why? Because I'm a big round number freak and it's 10 pips. And I'm up 40 pips already so far, looking for a further, what is that one? I'm going to say 350. There you go. Oh no, I didn't go 360. 360 is still the answer. I'm going to say 55 is you're in for rounding. You're looking for 45 pips or so up to the 45.4. So if anything I'm saying to you sounds like nonsense, say that's nonsense. That's not what you do in a session. But if that's what we do in the session, then you got to suck it up, dude, and do it with me. Not just in the session, but in your own trading when you're trading and I'm not online with you. You know what I mean? So can I get a 1 for it's fair and a 0 for a nonsense lie? You're speaking out your socks. 1, 1, 1, 1, 1, 1, 1, 1. There you go. We're still working in binary. 1, 1, 1, 1. 1. Excellent session, James. Many thanks. Thank you. And thank you for the thing on overtrading. I appreciated that very, very much, Petra. Thank you. So lots of ones from everybody. And if is anyone trading just by chance, you only have to write 1. Did anyone take any of the trades we looked at and take some pips in the session? 1. All right, well done. 15. So, oh, brilliant. Well done, Petra. 15 pips. 6 for Peter. And I don't know if that's a 1 pip, Anna, what? But thank you anyway. Well done on the people who... There you go. Look, there's the 61. You're out for 10 pips. That's 50 pips for this session. 50 if you took some or all of them. 45 for Anne. Score. Well done. Well, then that's brilliant. There you go. It's only an educational. And I remember strictly saying at the beginning, no trading. No, I made up. You've made me day and you're giving me goosebumps. And I appreciate it very much. Thank you, everybody, for joining me in the session. I am going to end the recording now in case you've got any questions that are, on the proper strategy or something. But thanks for watching. If you are watching the recording, please trade safe and I'll see you on the next one. Thank you and bye-bye.